Good afternoon, everyone. My name is Jeffrey Baskin. I am a currency analyst for Synergy FX. I will be running today's webinar. The title of the webinar is the Week in Review, and what we do during the Week in Review is go over pretty much what happened in the Forex market this week, what we expect to see kind of in the last trading day of the week, and some of the possibilities that we could be looking at for trading opportunities next week. Before we get started, as always, we have our legal disclaimer. The purpose of this webinar is for educational purposes only and should not be construed as trading advice or counsel. Foreign exchange trading carries a high level of risk, and you could lose some or all of your investment. If you have any questions, please contact an outside financial advisor or tax advisor to have those questions answered. And please do not invest risk capital that you cannot afford to lose. With that being said, the way that we run our sessions is pretty simple. I'm going to talk about probably 7 or 8 different currency pairs, go over what happened this week, and give you some trading levels that I feel are important as we close out the last about 18 hours of the trading week, and then also answer any questions. It's an open forum, so if you do have questions, please feel free to jump in and throw your questions out there. We'll start with the most popular topic as always, and that's the euro dollar. Right now we're looking at a 1-hour chart on the euro dollar, and we pretty much had another roller coaster ride of a week. We had some pretty decent moves, in the last, 24 hours. We went from 132 down to 129 and change, all the way back up to 131.30, and that is strictly all, all headline news based on the Greece deal. Originally, as we saw throughout the week, that everybody was coming to the table, they were all negotiating, and they thought they had a deal, and then the terms weren't good, so people started to lose faith in the deal, and the rumor started to fly that Greece was going to leave the euro, and that caused unrest. And then you see the euro go from 132 pretty much all the way down to 129 and change yesterday. As Europe came into the market, there was news that they were going to get support from not only China, but also that they were starting to get some of the pieces in place as far as buying up some of the Greek debt and buying some of the Greek bonds, and then that caused once again everybody to feel happy about where everything was going, and we saw euro strength. So, this pretty much is an indication of the deep V that we have here. We went pretty much turned on a dime, from this whole thing is going to fall apart and Greece is going to be no longer a part of the euro to, oh, happy day, let's all hold hands and we're all friends again. So right now we're on the 1-hour chart. These are the 100, 200 period moving averages. We seem to be kind of hanging around right here at 131.31, and we see the 100 period moving average acting as resistance here. Pretty much reason for that, we had a very large range on the day, almost 200 pips for that, and it's kind of hanging here. And I would imagine this thing will kind of go sideways until we see what happens when Europe comes in to the market in 3 to 4 hours. And then this will either act as resistance and it will push back down depending on today's outlook of the upcoming deal. We have current level is 50% retracement from the initial move down. and you pretty much, depending on where you want to put your top on the chart, we're sitting, right at 50%, or the 100-period moving average. Either way, this is going to be your breaking point here, between 31.30 and 31.60. Depending on, that's just today's outlook for for the Greek deal, and whether or not the world sees it as favorable or unfavorable towards the future of the euro is going to be where this breaks. If the continued favorable outlook is held, we could see another 150 pips today, and we could finish out the week close to where we started it at 133. If not, we could see it, back around 129 by day's end. You're seeing, on the 1 hour chart, you're seeing these very long candles, which means we're getting a lot of volatility and a lot of movement. So, if you are going to take trades on the euro dollar, make sure that you find some technical areas where you can set your stops, above or below, depending on which way you're going, and make sure you do have stops in place, because that's why I said this thing it's moving. And normally on an average day we see between 80 and 110 pips roughly on the range, and yesterday we saw close to 200. It's almost double normal daily trading range, and it's been that way for the last couple of days. So just be careful with some of the trading that you're doing on the euro, and try to stick to the direction that the sentiment is looking at. I personally think that they're going to continue to work towards a solution, and I think once we kind of break 31.60 to the upside, that this should continue to go up. But once again, it's been so choppy. I mean, even if you look through here, we're just getting these just indecisive moves, up 50, 80 pips, down 100, change, and back up. It's just a lot of chop and a lot of movement. So this is kind of the area that we're sitting here. It is a key technical level, as Alan had pointed out in his question that he asked about Fibonacci, and that's what we're going to see. If this thing does head up, that's why I said 31.60. Break through that should be your indication of upside move, and if it heads back down, you can look for below 31, and then even stronger below 30.80. 30.80 is kind of your other previous area of support / resistance, and that could provide your downward entry area. So that is pretty much the euro dollar in a nutshell for this week. We're going to see what happens going into the end of the week, and supposedly they're going to finalize the deal over the weekend. So with that being said, I would make sure that you close up shop as far as any open trades, unless you're a really long-term trader, for the weekend by close of market tomorrow. Simply because if they do finalize some sort of deal over the weekend, you could have a major gap when the market opens, and that could put some of your positions in jeopardy. So I would definitely keep that in mind as we roll into the weekend. We are seeing strength across the board pretty much with the euro. Same move on the euro yen here. You do see that over the last 24 hours you have this kind of deep V, and then right now we're sitting at 103.83. And let's take a longer look at this. This is a daily chart. We just broke through the 100-period moving average on the daily and the Ichimoku cloud, which kind of is indicating that this upward move is continuing. We are seeing Japanese weakness, at least on the currency side of things. However, at the Japanese stock market, Nikkei's at 6-month highs, and you're getting some big time strength out of Japanese markets, but the yen has finally started to show some weakness over the last couple of weeks. So what you're looking at here is just the euro continues to strengthen. This is definitely a good pair to trade that off of, just due to the fact that the combination of euro strength and Japanese weakness could push this back towards the 105 area. So we broke through the 23% retracement area and the cloud and the moving average. So once again, as I said, if the euro continues to look strong, it's definitely a good pair to be trading. And your next target would be pretty much this one, the 200 period moving average, and you'll see if it can push that far. Okay, now we've been keeping the Euro Swiss in mind simply because of the possible potential involvement with the Swiss National Bank. There's not a whole lot to report, still sitting between 120 and 121. There hasn't been a whole lot of push in either direction. You can look here over the last, I don't know, let's go to the hourly. The last 12 hours, we've had probably a total of 30 pips of movement in either direction. Once again, if it starts to approach 120, look for short trades. If it starts to approach 120, 125, look for something above that, which is your upward resistance. Other than that, just leave it alone and use it as a gauge or potential gauge for Swiss National Bank involvement in intervention with the Swiss franc. In the meantime, this thing is not going anywhere fast. This is very much reminiscent of the dollar-yen a couple of months ago, where it really did not move day to day. All right, that takes care of the euro. As far as the pairs that we're going to cover, does anybody have any other questions in regards to the euro or anything about the euro in general? All right, let's jump into the Australian dollar. Right now on the Australian dollar, we are sitting at 107.81. We're getting back to approaching the 108.46 near-term high that we saw over the last week or so, and it took a small break where it pulled back, off the trend. Pretty much since November, we've been in a solid uptrend. We did take a small break where it pulled back over the last couple of weeks. A little bit of a correction, but fundamentals are good. They didn't cut rates. RBA didn't cut rates, and we have seen the strength continue, and it doesn't look like there's really much sign of slowdown. It formed a little bit of short-term support at the 106.25 level, and we pushed up from there. We're going to pretty much use the moving averages as stops and and support, and it's just going to continue to run. As you can see, in the uptrend, it's been pulling back to these moving average lines. You have one here, 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 a little bit below here, but for the most part, it's riding this thing and continuing to push up. And until something else happens, that either the Europe solidifies, or the U.S. economy shows some more signs of improvement, I would say that the Australian dollar is going to continue to rise. Gold is staying strong. It's staying above 1,700. And as long as gold stays strong, Aussie should stay strong right along with it. We can look at some of the other Aussie pairs. You have the Aussie CAD. Now, Aussie CAD is a little bit trickier simply because the Canadian's been strong too. So you're getting a little bit more of a choppy move. But for the most part, you're still seeing upward strength here. Over the last couple of days, this is pretty much the result of the quote-unquote oil rumors out of Iran, who were saying that they were going to cut off oil to the European countries, and you saw oil shoot up through 100 and top out at close to 103, which boosted the Canadian a little bit. So you definitely saw some Canadian strength in this pullback. But once those rumors were found to be unfounded, this is pushing back up. You have a little bit of a off kilter, I guess, double bottom here with a midpoint 107.50, and I think if you pop through 107.50, you should probably be looking at 108, simply same as the Aussie dollar. This thing just continues to ride up, and same kind of scenario. It's pulling back to this 100-period moving average and just continuing to get a boost. So keep your eyes on that, and continue to play Aussie strength. And unless something happens out of Iran with the oil situation, with this pair, same deal. Australia should continue to dominate and get stronger. We see the same thing on the Aussie yen. The pullbacks to the moving averages and Aussie strength, and this is just through the roof, because the Japanese yen has been weaker than the Canadian and the U.S. dollar, so you've seen just more larger moves, and just it's been moving pretty good over the last 12 hours. We've seen close to 200 pips, and there's really once again no signs of slowdown. Alright, that takes us through the Aussie dollar. Does anybody have any questions about the Aussie dollar? Well, I mean, not the Aussie dollar, just the Australian in general. Alright, let's keep it moving. We'll hit the rest of the major pairs. Talk about dollar Swiss, and we'll also talk about the pound dollar. Dollar Swiss is been interesting simply because we built a little bit. This is a daily chart, so there's a lot going on. I'm just going to clear some of this off. We recently kind of drifting around this 100-period moving average. We built some support at 90, 91. And, pretty much 91 roughly. We're sitting at 91, 91. Right now we had a small pop to the upside, which recently came back down, and now we're continuing to go sideways. This has been a little bit tricky, simply because we've seen Swiss kind of haven strength, but we've also seen a little bit of dollar strength recently. But I do think that the kind of the quote unquote the little dollar rally that we had is coming to an end, and this may head back down and test this 91 area of support. And if that's the case, and he breaks below 91, and we could be heading back down towards this 200 period moving average at 88 and change. And on the flip side of that, if we see some strong economic data out of the U.S., we'll look to see if this can break back through and hold above the 100 period moving average and build up and get into break into 93, and that's kind of the level that we're looking for. You'll see that we have resistance here at 92.99 or 93, and we will see that's kind of what we're looking at on the dollar Swiss. We want to see if it breaks below 91 or breaks above 93. And now let's take a look at the pound dollar, which is the last of the majors. And then pound dollar has been a little bit more stable, I guess you can say. We have had some choppy times, but we had a nice run up, and then a nice run. It's been really technical, I guess. Once again, pulling back to moving averages. We got a break, ran down to 38%, 38.2% retracement level, and we're now back up. This is getting the push, same push that you're seeing from the euro, and it's continuing its strength, and we want to see if it gets above this 58.67 level. We had some previous areas of resistance here, and as long as the euro continues to strengthen, I think you'll see the same thing with the pound. I do think that we'll see that continue to roll up along with it. So use this as a secondary gauge. But if the euro deal gets done and we see strength out of Europe, I think this will continue to go up, and we're going to look at 160 or 159 and change as a target of the previous high, and then see if it's going to continue to pop up through that. This is a daily chart. Let's just take a look at this. You'll see that we're approaching this 200 period moving average here at the 158.47 mark. So that's kind of the level that we're going to look at. It coincides pretty much with resistance, and we want to see if it gets above it. And the last pair that I have before we actually start talking about the Canadian, does anybody have any questions about the pound or the Swiss or any other pairs that we talked about so far? Alright, we will wrap up the day talking about the Canadian. Once again, as I mentioned before, we saw some Canadian strength based on the rumors out of Iran and out of Europe, and then that was pretty much once even when they were found to be unfounded rumors, we still are seeing Canadian strength. Oil still up. Dollar still weak, and this is continuing to head in a downward trend. It broke briefly above. Sorry about that. It broke briefly above parity, and we ran to previous level of resistance at 10050 and could not get up through that. And now we're back down around 99.50. I do think this is going to continue to head down. Canada's been pretty strong of late. Oil's been up. U.S. dollar's been weak, and we haven't really been able to pierce this 1050 mark. So I think as long as we stay below 1050, this 10050, that this is going to continue to head in a downward direction. We'll look at a little bit longer of a chart. You have this as an upper range boundary too at 10075, and then resistance at 10050. So it's going to have a lot to get through with not a whole lot of fundamental data to support it. So definitely look for this to continue to be bearish and head in the downward direction. That is all I got for you today. Once again, I'll open it up. Anybody have any questions whatsoever, feel free to throw them out there now. If you have future questions that you'd like to send me via email, you can send me an email, Jeff, Jeff, at synergyfx.com.au. I'll be happy to take your questions there as well and answer you and go back and forth via email with any trading ideas that you have. If you need a demo account or a live account, you can go to synergyfx.com.au and get all the information that you need about that from that site as well. That's all we have. And if you're looking for intraday market updates, just follow us on Twitter, twitter.com/synergyfx. Enjoy your weekends, everybody. We'll be back in a few days, Monday afternoon in Sydney or Sunday evening in the States, depending on what part of the world you're in, to discuss the week ahead and kind of update what we see going into next week for trading levels. So enjoy your day. Good luck with your trading, and we'll see everybody next week.